Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 21st of February 2020. So, yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump in, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, guys, feel free to visit us here on jfdbank.com and click on the research page right there. Right, now then, let's jump into the charts. Now, the first one I want to touch on here for today is the German DAX. Now, I've looked at DAX this week, and basically the same idea remains. And I was talking about this barrier right here near the 13,795 mark, which is, as you can see, this week continues to hold the index from pushing higher. So basically, this is that all-time high which we need to overcome in order to consider further move higher. For now, it's very tricky because, as you can see, yesterday the indices sold off, and we saw the European session closing in the red. Then the US markets also closed in the red. So basically, looking at this right now, there is a possibility of further declines. And let me just quickly have a look at the cash index right now, where it is balancing. So yes, there we go. So the price right now is balancing near this 13,640 zone. So I talked about this previously. Basically what I was talking about, that we may get a drift lower, and if all this area holds, we could see a nice rebound and a push back to the upside. So again, that's for now, because don't get me wrong, if this starts falling below the 13,640 or even below these 13,600 zone, then of course keep your eyes on this medium-term upside support line taken from the lowest point of August. And yep, this is what we're going to be keeping an eye on, because if that gets broken, then well, further declines could be possible. But as I've mentioned in my previous videos this week, for us to get even more comfortable with let's say deeper extensions to the downside, that's the level we're looking for, a break of which could lead towards further decline. So the area around the 13,445 zone, or even the 13,400, this little area here, a break below this could lead towards further declines. So for now, all eyes are on this little territory of support near between the 13,600 and 13,640. If it holds, and if this upside line holds as well, then there is still a chance for a rebound and a push higher. But if it breaks, then well, I mean, this is where it could turn a little bit ugly for this index. Gold. Now, gold continues to move higher, and of course this move here, some might say that this started popping higher before kind of accepting the fact that the markets could reverse. So for now, yes, I mean, of course, the whole situation surrounding the coronavirus and just the fact that the equity markets are way too overbought, but basically people are trying to look for safe havens. Now, the yen is not really working, or not really doing the trick right now, and I'll show you. I'll come to that later. So safe havens like gold and silver are becoming attractive again. So, and from the technical side, you can see that yes, we managed to clear this 1611, 1612 zone that I talked about yesterday. and we managed to stay above this. This is the most important, because that was the highest point of 2020, so this year. So basically now gold created a new high for this year, and the big question here is how far it can continue traveling north until it will find good resistance from which it could reverse and correct a little bit lower. So for this, let's jump into a daily chart very quickly and have a look at some of these levels. So well, I need to scroll back a lot here, but basically the most important thing is that the commodity overcame this obstacle here around the 16 level. So 1616, that was a good high here that we saw on the 22nd of March 2013. So it managed to overcome that, and now it's pushing further north. Now don't get me wrong, looking at this chart here, let me just kind of zoom in here a little bit. So the next potential obstacle on the way higher here could be this little high that we saw here on the 5th of February 2013. So that's a good potential target, 1685. That's around there. Currently, the commodity is balancing near these lows, the lows of December here and the lows of January. So we'll keep a close eye on that in case this gets a hold up around here. But to be honest, if the acceleration continues, that's the level that we're targeting. The 1685 could be a nice potential area of resistance. Slightly below that, we do have this little obstacle here, and that's around 1654 mark. That's actually, let me just zoom in here a little bit. 1652.54, so roughly around there, guys. That's basically the low of the 25th of is that 25th? No, that's 28th of January 2013. So good also potential target to consider, but as if this is just seen as a temporary obstacle for this commodity, then yes, keep an eye on the 1685 zone. So yep, guys, for now everything's kind of leaning more towards the upside. Let's see if this can continue pushing, or should I say, let's see how far this can continue pushing north until we see a bit of a correction here. For now, yep, we are more positive than negative. DXY. And I'll stay on the daily chart here, and basically I've looked at this one this week and in the beginning of this week and then in the middle of this week as well. So what I was telling you guys to keep a close eye on this this barrier here, the highest point of 2019, which was around the 99.67 zone. We overcame that yesterday. We stayed above this barrier, and in a way, even if we see a bit of a correction here to the downside, as long as the price remains above this barrier, we're still going to be aiming higher. We fell shy just from a few points of reaching the psychological 100 level, and this is what I was talking about this week. Basically, if we get a break of this barrier here, the 99.67, then yes, there is a good chance to reach this psychological 100 zone. So now the big question here is actually, will this go for a correction first and then kind of travel for that psychological 100, or will we actually get a test of the 100 and then a reversal to the downside? So for now, looking at this picture, in a way, kind of I'm leaning more towards a test of this 100 first, because we're not really that far from it, and especially if we get a push above yesterday's high. If we do get a push above the yesterday's high, which is around the 99.91 zone, then yes, keep your eyes on the psychological 100 zone, and we'll see how it performs around there. Now, if by any chance this starts falling below the 99.67 area, then, well, I mean, in a way, kind of brace yourselves. This is where that deeper correction could come in, because the reason why I'm talking about correction, because overall we're still above the this upside support line, the short-term upside support line taken from the low, the 31st of December. So yep, keep your eyes on that one. WTI oil. Now, I talked about this yesterday, and basically what I was talking about was that this was our target. This was our main level that we were targeting, the 54.35 zone, and look at the perfect test of it. Of course, I've drawn a Fibonacci here, a Fibonacci retracement, but the main level that I was talking about was the 54.35. So we managed to get a perfect test of that. Now that's where it's going to be very interesting here, is if it stays, for example, above this 23.6% retracement on the Fibonacci, then we could see a nice push to the upside, and maybe even a break of this 54.35 zone. So for now, we'll keep that on the chart here, and that's going to be our level, which we will from which we will consider slightly higher areas. So we'll, as I've mentioned previously this week, we will go step by step on this one, because don't get me wrong, this move higher right now could still be seen as part of a correction, because you can see that the price is still balancing below the 200 EMA here on the 4-hour chart. So basically it's struggling. Yes, it did have an overshoot, but it's struggling to stay above this line. So in a way, if we do get a push above the 200 EMA and a push above the 54.35 zone, then there could be a chance to see maybe higher levels. But for now, it's very tricky, guys. It's I wouldn't say that we're bearish on this one, because for us to get bearish, we would like to see at least a push back below the 52.15 zone, or even better, a drop below the 50.87 mark, somewhere around here, the low of the 18th of February, and then yep, we could target the downside. For now, it's a little bit, like I said, it's a little bit tricky. We did get a nice push already higher, but we would like to see some clearances here of some obstacles above before considering the upside. So keep your eyes on this one, be very careful. I would say that we're a little bit on the neutral side right now. GBPNZD. I've talked about this one a while ago, and basically what I was saying, that if we get a nice push above the 2.0 56, 57 zone, then yep, there could be a possibility to move higher. But this is where I was a little bit, I would say, wrong, because you can see that yes, it did push higher above this, but this level in the end got kind of violated, because we had another drop, a few drops here below this area. So in a way, we can actually get rid of this line, and what we will focus on mainly is, of course, this little short-term upside support line, so which kind of we can draw here from the low of the 12th of February. So it's a bit of a tentative one, but nevertheless we'll keep an eye on it. But of course, the more important thing here is this area of resistance. Let me just shift the chart here a little bit. This area of resistance, guys, basically marked by the highest point of January this year. So in a way, the pair did already overshoot that barrier this morning, and it kind of created this new little high for 2020. Now the big question here is, can this push further north, and can it stay above this area? For now, we are going to be targeting the upside. We are going to be positive, but of course, don't get me wrong, if by any chance this barrier continues to hold, well, I mean, expect maybe a bit of a correction here to the downside, and we'll keep an eye on this little short-term upside support line. But to be honest, for the downside, in order for us to aim for lower levels here now, we would like to see a drop below this little territory here, the low of the 19th of February, near the 2.0203 mark, roughly around there, and then yep, we will aim for some downside. Until then, any kind of move lower, any throwback here could still be seen as a temporary correction before another leg of buying, but in order to get comfortable with the upside, we need to see a push above this barrier here, the 2.044142 zone, roughly around here. We need to see a nice good strong push, and what you could also keep an eye on is a 4-hour candle close. Maybe if we get a nice 4-hour candle close, then this could increase the pair's chances of drifting further north, and this way, of course, it would confirm a forthcoming higher high where yep, more bulls could start joining in. EURJPY. Now this one, of course, finally stopped accelerating, and this is what I talked about yesterday when I was covering EURJPY. Now the 121.36 worked out perfectly. This was the level that I was talking about, and what I was saying as well, that if by any chance this tests this 121.36 but then drifts back down and stays below the 121.03 zone, then well, we could expect maybe a bit of a deeper correction here. Now, the reason why I'm saying a correction, because in a way the still the kind of the yen is on the weaker side, and there we could see the pair pushing higher again. But for now, of course, this is the scenario that we'll keep an eye on, where we could see maybe a drift lower, a test of this 200 EMA, and then a rebound and a push back to the upside. But in terms of the downside, well, ideally a drop below this 120.14 zone could do the trick for more sellers, because this would also place the rate below the below all of its EMAs, and well, on the 4-hour chart, of course, and then yes, further declines could be possible. So again, for now, the move lower, yes, we will consider that, but it could be a temporary correction before another leg of buying. For those who are more on the cautious side, what you could do is just basically wait for a push above the 121.36 zone, and yep, this way you could play it safe here, and be on and because this would confirm a forthcoming higher high, and yep, could lead towards further upside. Now, for those who are more risky, yes, you could consider this potential retracement here, maybe a small retracement, and then another push higher. So if we actually draw a Fibonacci retracement here on this one, and just try to maybe see which is the more appropriate level to keep an eye on. Now you can see that the pair is currently balancing above the 23.6% retracement on the Fibonacci retracement, and that's roughly around the 120.70 mark. If it drops below this, yes, we will aim for that 200 EMA, but probably could be the last resort for the bulls to step in here. Could be around the 120.26 zone, or in other words, what we could see here is a drop lower, a test of this 200 EMA on the 4-hour chart, an overshoot, a test of this, which we see sometimes happening, a test of this area, the 38.2% retracement on the Fibonacci, and then a reversal back to the upside. And yep, that's where the bulls could play this one nicely. But as I said, for the downside, we need to see a drop below this little territory, the 120.14, before we could consider further declines. EURUSD. So a bit of a messy chart, but what we can do now is, and let me just, this is the Fibonacci retracement that I've drawn yesterday on my Trader's Tea Time. Basically, we can for now get rid of that, and most important, what we could do right now is get rid of this downside line. Now, of course, this line got violated. Now the pair is in somewhat of a consolidation mode. It tried to push above the 1.0815 level yesterday, did so, but failed to stay above it. So that's, of course, still raises concerns about the upside. But at the same time, we can see that the pair continues to balance above this 1.0777 mark. So in a way, as I've mentioned yesterday, you can review my yesterday videos as well. So we need to see a drop below the 1.0777 zone before we could consider a deeper move lower. The next target for us is going to be the 1.0738, and then we'll take it from there. But if this reverses and pushes above the 1.0815 zone, then, well, I mean, there could be a chance for some buyers to join in here, because this would place also the rate above the 21 EMA on the 4-hour chart, because as you can see how well this continued to kind of keep the rate down from around the beginning of February, basically, this 21 EMA. But if we get a nice push and we get a nice 4-hour candle close above that, then, well, I mean, this is where it could become a little bit more interesting, because we could then maybe target some larger corrections to the upside here. Of course, to get a little bit more comfortable with higher levels, still the 1.0878 zone, that's what we're excuse me, looking at. That's basically the lowest point of 2019, but we'll start considering the upside if we get a push above the 1.0815 zone, and then, yep, we'll take it from there. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on today at my traders tea time, 14:15 GMT as always. But I hope you have a fantastic trading day, guys. And yep, I'll see you later in my traders tea time, 14:15 GMT. Thank you very much, and bye bye.